to Trading with Livevol, and this is where I trade my own Reg T account, and I use LVX to trade, and you guys can see what I do and how I go about using the software. So let's go to my accounts. So I'm up a little bit today. Here it is, nothing big. Most of it is just Apple going up $6 because I have 4 of those spreads. But let me actually kind of talk to you guys about what I found out. So just to give you guys a quick recap. So what I do is I set this watch list trades, all of them. And the way I set it is I try to get any trades in the marketplace that's 1,000 contracts or greater, and then it'll come up as a ticker right here. So what that allows me to do is basically have this up, and as this scrolls, I can kind of see what's trading, right? So I'm looking at it, I see trading, and then there's something of interest. I look at it, and I check it out, right? So just recently, all these are trades that came in. Like this one right here was something I looked at just before I came on the air. I made a note of it. Facebook, Jan 15, puts 30,000 times. But anyway, the ones I'm talking about, we're going to talk about, comes from this list right here. And I'm going to actually start with SPY. So SPY, basically, you see all these trades that went up. But in this morning, you see all these calls that went up, the May 192 calls. It seemed pretty interesting. Let me actually go to it. Now you can see, like, look, this trades a lot. So just by looking at that is not going to be the only decision, but it did kind of make me look at it a little bit, saw these call buying basically on this strike, and then what I do is I just kind of look at the chart and see how that looks. So that's a pretty out there call. We'll see what happens, but I thought it might be interesting to see. One thing I did see that's of relevance right now is AMD. So you see AMD had pretty good earnings. I actually didn't even read it, but I'm assuming they had good earnings. It went up. And if you see the options order flow, you can see people piling in on these June, May 4.5. So they're just basically buying up calls left and right, especially the out of money. See how 10,500, a whopping 39% of all the calls traded are out of money calls, and they're traded on the offer. The net delta is positive, net premium. So this is kind of like generally a bullish order flow. Now, unfortunately, the stock's already made its move. I guess it depends on whether you think it's going to make a move outside this 450 range, right? So you see how it's been around the 450 range for a year. Let me actually go to this one, see if I can see a longer term. So this is AMD's range. Pretty much it's been stuck between $4 and $4.50. Let's actually see weeklies. Yeah, so basically for a year it's been here. So now the whole question is, do you think it's going to move out of this 450 range and break out? Let me actually see the volume. Yeah, you see there's quite a decent amount of volume right here, but beyond 450 there isn't that much volume, right? Let's actually see weeklies. Right, so basically, yeah, 450, it's the line that they have to cross, and once you cross it, you can kind of see it going up to $6, right? There wasn't that much trading between 4.5 and 6, so you can easily see it go up to $6 right here, just technically speaking. So the first thing I check, right, as you guys know, is I see these people buying calls. Well, why are they buying calls? Well, it's at a 52-week IV, it's at the bottom 3 percentile, right? So it's a good time as any to buy calls. As you guys know, I have been following the chip sector a little bit, and Micron, they've been heavy call buying. Even today, looks like there's more call buying. but I piggybacked this trade where this trader bought this, made 20 calls for 287, and they also bought it at the bottom 10% of the IV30. The chart looked bullish, and today, not to skip around, but on SMH, the semiconductor index, basically, if you look at the stats, you see all these calls being bought, right? So August 50 and August 47, basically what they're saying is 47 and 50 in August is what people are thinking the semiconductor might go. You see how like it's been on the steady incline. So let me actually go to this chart right here and go to weeklies. All right, so you see how the weeklies, it's just been, since 2013, it's been on a straight line. Now they're betting on the 47 and 50s in August. So what's that, April? So that's like up here. So, you know, down the road, it's going to be up here. We'll see if that happens. But usually what this does, just to kind of put it in perspective. So let's say you're bullish in Micron, just like myself, right? So you look bullish in Micron. You see all this order flow come in AMD. That's bullish, right? And they're buying low vol. SMH, bullish. They're buying low vol, right? So SMH is bullish. Look at the options order flow, stats. Oh, well, actually, it's not low. It's actually pretty high. So, you know, maybe there's an opportunity to maybe sell some calls and buy some calls on the individual stock, right? So maybe you sell the index options and you buy the individual component, the best of breed. So what I'm saying is I can buy the Micron calls and maybe sell one of these index calls, right, at a higher volatility, and basically I'm gonna play them off against each other, right? So you sell the index at a high vol, buy the individual at a low vol, and hopefully like it reverts back to the mean. But in any case, it's harder to do when you have a small account. My thinking is that my viewpoint is like, yeah, they're betting bullish bet. Also, Intel announced their earnings recently, and it was also bullish, right? So you see what I'm saying? You kind of start getting an overall picture, right? So you see overall picture of people betting bullishly on all the chip sectors, and then you see here generally looks like in Intel they're willing to sell puts and maybe sell calls as well. Maybe they think it's going to trade range bound for a while. But whatever the case, the order flow has been generally pretty bullish, and then you can kind of take that, and then let's say you're trading AMD, and you can take that and kind of take that as a factor when you're making the trade, right? So not only are people bullish in AMD, but they're bullish in Micron, they're bullish in Intel, they're bullish in SMH, and then you can kind of follow those order flow to see whether it's a good bet or not. AMD as well, if you look at the stats, it's at the bottom 3 percentile, so it's pretty darn cheap. They just had good earnings. It had a little pop. Yes, maybe it's a good time to do some kind of spread, right? So as you guys know, I love these like you know, call spreads, right, on the upside. So let's see which one were they buying here. July 4 and May 9th 4.5, right? So they like the May 9th 4.5 call spread. That's these, right? So these are like 6 cents. Maybe you can sell. Maybe you can sell these for 2 cents, right? So you can do it for like 4 cents, and see how that goes. I actually like that trade. So while I'm yapping away with you guys, I think I'm actually gonna put this trade in because I like it. So I'm not going to do a lot. I'm just going to put a test case here. Buy one. So I'm going to have 2 weeks for this to come in. So I'm betting I'm actually going to put in the trade and then I'll tell you guys. I'm going to do it 10 times. Actually, I'm going to do it 25 times. All right, so I put it in. So I'm going to have 2 weeks basically to make the same amount of money as this guy. So you see how this guy bought the May 09 4.5 calls for 6 cents, 1,300 times. I'm doing basically piggybacking his bet, but what I'm saying is it's not going to reach 450 by end of this week, right? So I look at the chart, it already had a pretty good run up, so maybe it'll like kind of hang out here for a few days, consolidate, and then go back up to 4.5. That's my thinking. So I'm actually going to put on this spread for 4 cents. Let's see if I can get it. Not sure if I can. And if I don't get it, then I don't put on the trade. But basically, I'm piggybacking that person. But the fact that I know options and I don't want to just pay for these calls outright, I'm actually selling these against them to offset them. And if let's say I did this and AMD went up higher by a little bit, but didn't reach 450, I actually have an option to sell these May 4.5 for maybe for 6 cents as well, and that way I get these for free, right? So I like the trade. The hard part will be actually getting the trade on. So you see how I'm working this trade. You know what? I think I'm gonna do a 50 lot because I like this trade so much. So I'm gonna modify it to do 50. So 50 times 4 is 200 bucks. Is the most I'll be risking on this trade, and I'll get 50 calls, and hopefully like they'll be worth like I don't know, like 25 cents or something, right? So I make maybe 4 times my money back, but every time I get it for lower price, right? So if I get it not 4 times, 6 times my money back, but every time I get it for 4 cents and it goes higher, I'm like exponentially increasing my returns. So that's pretty good right there. So I'm gonna keep that going, see what happens. So AMD. Let me actually go to the next one, Philip Morris. So I was like poking around, and I see this trade go up, right? Look at all these puts that are being traded on the May 09 37.5 puts. They have earnings coming up 24th before market, but the fact that they're buying 9,000 of the May 37.5 puts is pretty interesting. Look at the stats tab. It's at the bottom 1 percentile of the trading range. They're buying puts. It's opening. I look at the chart. It's been pretty bullish. The one that they're buying is these, so it's not really that far away. It was 37 just basically 21 days ago, right? 3 weeks ago, it was trading the same price as the puts that he's buying. I like it. I don't really know exactly how to take advantage of it because you see, any put I'm selling, it's actually the earnings put. So I'm kind of thinking this guy's making an earnings play on this. But who knows, right? And plus, he bought it for, what price did he pay? Yeah, so he paid 33 cents for most of them. It's 33 at 36 right now, right? And most of it has been trading for 36. Let me actually put in a 33 bid, and I'll buy a 5 lot, right, for these puts. I should put a 34 bid in. I'll put 33. So now the best bid right here is me in NASDAQ. So I'm gonna be 33 bid. Hopefully I get filled, and then if not, I have all day to kind of decide whether I want to do that trade or not, right? So I got all this stuff going, and I'll see what happens, right? So I'm working the MO, and I just put in the spread for AMD, which I like as well. And let's actually go to the next one. We got a lot to cover, so I'm gonna try to move as fast and as efficiently as possible because I want to give you guys as many choices as possible. So in XLE, you see these heavy put buying, right? In the May 1791 and 92 puts. Looks like they happen at 2 different times. This one happened right in between, but you see how the bid was 99 bid at 104, and they paid 103. So most likely they're buying, but let's see what they are. So what I do is I go to the stats tab. It's the bottom 20 percentile, so it's relatively cheap. The index have been screaming because pretty much every energy earnings report has been pretty much off the chart. I think I heard on CNBC basically they're beating it by 22% year over year. That's a pretty good clip to beat at. And now it's risen quite a bit. So let's see, from 87 to yeah, so it's risen $6 in the last pretty much 7 trading days or so. So if I go back to these May 17, you can see how somebody might be willing to buy some protection on these puts. So it looks like they're buying. It's 98 at 72, 74. I look at the chart. I mean stats. Right. So basically, you can buy these cheaper. And then you can buy these, I don't know if it's cheaper or not. Let me actually see. I forgot already, which isn't good. Yeah, so you can maybe get it for the same price. So this might be something you might want to buy if you think, if you're bullish on XLE and you've ridden this up, this might be the good time to hedge your position just because, like, look at all these put buying and the volatility is relatively low, right? But you can see maybe that might spur the volatility to maybe tick up again. But XLE, people are buying the May 17, 91, 92 puts. It looks like a decent play just because it's ran up so much, right? So all this person is saying it's going to retrace back to like this level, right? For those of you guys doing like Fibonacci, we're talking about not a big retracement back, and that's what he's betting on. I kind of like it. I'm going to think about it a little bit and see if I want to put that bet on and piggyback it for those prices. But, maybe the 92 puts. But as you guys know, I hate buying those puts naked. So maybe... I got an idea. And if you guys can't hear me, it's because it's kind of weird because I'm trying to think out loud, right? But so I'm going to buy these. Same thing as the one the other guy bought for 103. And I'm going to try to sell these, what was it, 92, right? Right, so I'm going to try to sell these 92 puts, which expired this week, and let's see, 22, 76 cents. I like it. I'm going to do that 76 cents. I'm going to do it twice, maybe 3 times. I'm going to do that 3 times. Boom. Right? Oh, I just got filled. on XLE. Pretty exciting because I just put it in. Maybe I should have maybe looked at the prices a little more carefully. But you see I got filled, and what did I get filled for? 76 cents. So I got filled for 76 cents on a put that this person paid 103, right? But I did a time spread where I don't think it's going to reach 92 this week, and I'm still betting with the guy, right? So that's pretty good. That's pretty good. I'm pretty happy about that. I'll think about it and see if I want to put more on, right? And I know sometimes you guys might think right now that I only buy calls, but generally in my lifetime I've been more of a put buyer, and I usually bet on the downside bigger. But just market's been up for the past year, so what are you gonna do, right? All right. So the next one. So this is pretty exciting because there was 3 trades or so I liked. 2 of them I put on while I'm on this. I got the idea while I'm actually talking to you just now. So I didn't really even think about doing any trading, but as I'm talking about it in this blog video, it just kind of dawned on me it might be a good trade to spread, right? As you guys know, I love spreading. So here's Facebook, or not so much spreading, but I don't want to pay for the options. So this Facebook, I just found out before I got on air, and you see the Jan 1545 put, somebody bought 30,000 of these, paying 277. That's a pretty decent chunk, right? Now there is 20,000 open interest on these, so it's not 100% clear the guy is opening, but the earnings are coming up on April 23rd after market, so this is going to be a pretty hot stock to look at, and they're going to talk about it on CNBC. And generally, you can see the earnings. This guy actually think that it's worth selling this strangle, right? So you see how this guy is actually, this is pretty interesting. You see how, oh, never mind, because this guy's actually, could be two different people. So I thought it was one trade, but it isn't. You see these times? It's different times. In fact, this guy is doing this trade. This is the spread that he's doing, or buy right. Basically, he's buying the 61.5 calls, selling the May 72. So essentially, he is kind of bullish, but maybe delta neutral. So we'll have to see what that is. But definitely, I just wanted to show this. Not sure why this person will buy 30,000 puts. This one for sure, I wouldn't just bet negatively just because I saw this. And this is why. Because it's such an odd strike and the odd amount in terms of 30,000. It's kind of coming from nowhere. It could be anything. It could be somebody hedging their position or something like that. So I'm not sure if they actually, in fact, this could be partially closing. So I think this remains to be left to kind of like investigate further. But you got a few more days, but this is something to go off of. So this is your anchor trade that you found out about Facebook, and you can go from there. If you take this 30,000 out, basically calls are trading 2-to-1 against the puts, and the amount of deltas would have probably been much higher if this trade was taken out. So generally, people are betting bullish, but we'll see what happens, right? Okay, so I just ran through all these trades that are kind of interesting so far for today for me. But you know, if you look at it for you guys, it could be a lot more because there were tons of trades happening today, right? So there are 1,000 trades that you can probably pick, and I picked like a couple of them to make my decision. But this software basically enables you to generate massive amounts of ideas, and this is what I want to kind of talk about with the ideas. It's ideas that are generated, but you don't actually pick the strikes or what you want to pay for, right? Essentially what it is let's say you're familiar with rigs. So you see how people are buying this call spread, right? This is actually a pretty, you know, I'm looking at it, looks like the guy paid 117 for this call spread. And the reason I talk about rig is, like I said, about the energy sector, and the energy sector has been pretty bullish, and you see that this person is buying a call spread. Look at rig chart. It really hasn't done much, right? Because probably Transocean has one of these, like, and I know a little bit about this company. They have a lot of old rigs. They need to get new rigs. Their margins are disappearing, blah, 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 right? But this person is making a bullish bet that it'll actually stay here or higher, right? So you see this is like a perfect trade that you can put on as a medium to long time investment. So you're paying 117. So if Transocean stays 49.17 or higher, you will make money, right? If it stays at 40, you're gonna make I don't know, like a 70% return on your money by August. Like it's trades like this that really, like, let's say you're kind of like, oh yeah, I think that it was overdone, right? In Transocean, and you think like there is some decent side, but you see how this is I'm gonna look, this is the weeklies. I'm gonna just look at the weeklies for now. See how the weeklies, it's the bottom's been around the 40 range, 39 the low, right? If you look at monthly, right, basically this is the range it's been. All you're saying is it's gonna actually stay here or better for the next 4 months or so. In fact, I really like this trade, so I think I'm actually gonna piggyback it. August 38.40. So this is, sometimes it's not really, maybe it's not the smartest thing to kind of trade right off the bat, but this is kind of how I generate my idea and trade, and it doesn't take you long. So as I was kind of yapping about the watch list, right? So I wasn't even talking about this. I was actually talking about this watch list, how I generate ideas from it. And I just generated an idea by looking at this trade that just went up, right? This trade just went up. What I like is the risk-reward ratio, right? So I'm buying the 38.40 call spread. I'm risking $1.17 to make 83 cents. And all I have to do is have Transocean stay at where it's at or higher, and I make that. In fact, it can lose 22 cents and I can make it. So let's actually punch it up. August 38.40. Now this is interesting. You know what's interesting about it is you see the open interest in these? You see how this blue line is the open interest? It's been steadily going up. In fact, it traded more yesterday than it did today, right? And I look at this one, same thing. It traded more yesterday than today. So what do? Well, this is probably one of the only softwares you can actually go back. So I'm going to go 3 months. You see this bar right here. If you click on it, it'll tell you the biggest trades yesterday. So yesterday, they were paying 303 and 162. So they were actually paying more to put on this trade yesterday than they're today. So it's one of those things like the guy puts it on yesterday for 150, looks at it today and like, my God, it's even a better trade today. So I'm actually going to piggyback it for 112, and I'm going to do it 3 times, right? 13 cents, same price. In fact, I can probably pay more because this guy paid more on. He's like averaging down to 125, right? So if this guy likes it that much, and just so you guys know, it's not like I'm just trading rig for the first time. I know a little bit about rig. I thought it was kind of cheap. So essentially what that trade gave me was an idea to start investigating rig, right? So it's not like I trade rig and then I go, what should I do? And then I do the trade. This is the other way around. And the reason why this is so powerful, while I'm sending this order, I'm going to talk to you guys why this is so powerful. Most of these guys who do these large block trades, I'm not talking about all of them, but a lot of these guys who do these trades probably know more about the stock than you do. They have more research, they have more money, they have more people who spend time analyzing the stock, researching. So I don't know why they did this trade, right? But somebody who did this trade might say, okay, stock's been pretty low. According to, it could be totally fundamental. This is worth a pretty good bet that there's much better than, if it's a 63% chance that's going to finish higher than $40 in August, right? If that's the case, this is a great bet, and they are putting on this trade, so I'm just piggybacking this trade for the same price. Actually, they paid 117 here. What did I put in? 113? Okay, I'm going to modify it and raise it. I'm going to do 115. Boom. Okay. This is pretty exciting. So I'll see if I get filled on this or not. The other ones I wanted to talk about was all these other stocks, but I'll go through them real quick. It's just stocks that I have positions in, right? So Apple, I have this call spread. It's my best stock today because I put this on, but I put it on before. They have earnings coming up, so really this bet is just going to be entirely dependent on what the earnings are going to be. And then we'll see what happens. In terms of the order flow, basically, it's been the same for pretty much forever. Percentile is 25%. Let me go to other one, BAC. Bank of America, I have these leap position on. Not leap, well, maybe it is leap. Jan 15-17 call spread, I put it on for 97 cents. Very similar to the rig trade. Basically, what I'm betting on is 50-50 that I'll trade $17 by end of, oh, okay, so I just got filled in MO, and I'll get back to that a little bit. Same thing here. HTZ, I had that spread on. So basically, I bought the other calls. My net actually is so it's 112 plus 85, 197.5. So I'm up a little. I could just sell out of these. I'm just not sure what to do because it's a one lot, right? So I'm kind of still bullish. I wish I traded more, so I could have actually sold out on some, but yeah. So I'm thinking like it's going higher. So I'm actually gonna just hold the one lot naked, right? Knowing that I paid 190. IWC, as you guys know, I have that put spread that I piggyback from the other guy, and it's the iShares Russell Microcap. So as we talked about how the IWM was taking a beating more than the Dow when the market goes down. This is like the IWM of the IWM, the micro, and this guy already made money buying the 77 puts, and I rolled into the 72 puts. So basically, I piggybacked it for one lot. I mean, I can close it out. It would be for a loser because I paid 130 essentially by doing that spread. If anything, maybe yeah, there's no other strike. So I'm basically holding this naked right now, but it's only a one lot, right? Coca-Cola. As you guys know, I made a trade before earnings. That was the spread, I'm just basically keeping it. I paid 50 cents for the spread. It's worth like almost $1. Maybe it's time to just close and walk away and consider it. Actually, let me see if I can close it. Complex, buy, sell. Yeah, so I'll be closing for 99. So let me send that order, close, yes. So I'll essentially double my money by doing this trade if I can close it. My last one is SPLK. This happens to me quite frequently. And maybe if somebody was watching me trade, they might say, hey, Stefan, you should just take the winner and walk away. But sometimes it's tough to do, and this one was just a one lot. So I was trying to roll into another spread, but I couldn't do it. So it basically that option went away, and now I only have this one lot left, right? So I was trying to maybe see it go a little bit higher to the 70 range and then sell it, but that's not working out so well today. Maybe I should sell it. But I'm gonna just keep it, and this is why. It bounced off the 7-day moving average, so hopefully it'll just bounce back and then it'll continue going up. But I don't know. So at this point, it's just my own personal bias. It's not so much anything on the software is telling me that, except for the fact there's more call buying, but then there's also put buying as well. So it's not like it's not all bullish. But it's leaning slightly too bullish, but the market's up, so it makes sense that people are bullish, right? So that's it. I was going through some earnings. Let me actually go through a quick one. So Netflix has earnings today. This is the thing that interested me the most in this one. You see how the trades aren't really leaning either way, right? It's pretty neutral. The volatility is up slightly, but this is the part that kind of interests me. So you see how Netflix right here, they have earnings today after market. 83 cents is what they're estimated. The options are predicting a 10.7% move, right, in the stock. Last 12 earnings, it's averaged 18.2%, right? So even though Netflix basically traditionally has a huge movement, and this actually shows you the last 4 earnings, 5 days before, 5 days after stock chart, the 2 straddles and the 2 volatilities. So just so you know, like last time it closed at 333 and then went to 388, right? So basically it moved up like 53 bucks on last earnings. And even though it moved up, this is very unusual that the stock moves up so much last time and people are actually selling options or not really respecting the option to move that greatly this time around. Now, that it could happen that it is, but if I was, let's say somebody had to say, hey dude, you gotta take a shot one way or another. My thinking is it'll probably move more than the 10% it's indicating. And what I like about this is already had this downward movement, right? So, and this might be worthwhile doing like a shot on a call spread, because I say that because like look, you see how like it's really sold off. It sold off about 20% since its highs. This is where it was last before it had the pop. And you know, if you look at weeklies, right? So this like 320 range, it's where it's hit twice before it went up, revisited it, went up, is now revisiting for the second time on support, and basically here it only hit it once, right? So you know, if I were to gamble on the upside, this might be actually a good time to do it, right? So you can do like a call spread. The tricky part is how much. Like ideally you would want to do something like this, is like maybe buy one of the April 133.55 call and then sell 2 of the 72.5 call, right? Or the 80 call, right? So you do like maybe one, yeah, maybe you can do like 360, 380, 1/2, right? And what you're saying is it's probably not going to go that much higher than 380. So you actually start losing if it goes above 400. So you can actually, this is a good bet. There's a couple of reasons why I think it's a good bet. I don't think I have the margin to put this on, but if I was down on the floor, I might take a small shot at doing that. And you know, you're risking 600 bucks to possibly make 3 times that. So I wouldn't bet a lot, just bet really small. And the thing is, even if it doesn't go up to 380, even if it just goes up to 360, you can probably make some money, right? Because you're premium, almost premium neutral. You essentially paid 60 cents for this 360 calls, so it's not like it's going to go to 0 overnight, right? So even if a Netflix doesn't move too much, but let's say it moves like a couple of bucks up or a couple of bucks down, you can actually still make money on this trade, because these probably won't decay to 60 cents, but the ones at 380, that's pretty much going to go worthless, right? So you're selling the one that's definitely going to be impacted after earnings, so it's actually going to have value or going to be pretty much worthless, and you're going to own something that might actually have value even if Netflix stock does not move, right? So I think it's a great trade. I would put it on if I had the money, but I don't, so I'm not going to put it on. Also, like you see how it already went to 400? Generally for myself, my personal belief is that once it hits this, you become a little wary, right? So if you got burnt already once, you're not gonna pile in at 440, right? At 400, you're gonna be a lot more cautious as the stock is going up, just because you suffered this painful downturn, right? So if you suffered this, you're less likely to just dive in again and buy all this stock. That's my technical analysis on it. The option analysis is that I would do a 1x2 call spread if I actually had the cash. I think it's actually a really good trade, but you know, that's just me. The other thing is too, one thing about Netflix is I watch Netflix. I'm a subscriber. I'm also a subscriber through my wife, Amazon Prime. So I watch that too, and then I see everyone else trying to get into Netflix space, which is why probably Netflix sold off so aggressively, because they're thinking like, uh-oh, everyone is trying to get into your space, and then you're going to lose market share. The truth is, I don't think that's going to happen anytime soon. Because even if I did subscribe to another service, now this is just me talking, if I subscribe to a new service, I would probably still keep Netflix. I mean, it's $8 a month, right? I wouldn't like pay somebody else $8 and cancel Netflix, because that company who's replacing Netflix, it's going to take them a while to have the same amount of content that Netflix has. You see what I'm saying? Netflix is already established. So like, it's kind of like people who had HBO. It's not like they cancel HBO and then get Netflix, right? They might do that now, but originally you just keep HBO and add Netflix as an additional. So what's going to happen is, I'm going to keep Netflix. You know, I have Amazon Prime, but if, let's say, somebody else did something that was spectacular and I had to subscribe, most likely I'll subscribe to Netflix and to that guy before I cancel my Netflix, which makes me think that their future is not so dire as people are thinking if people get into this competition. If anything, what it tells you is there's a lot of money to be made out there, right? Knowing that Netflix has such a huge advantage and people are still kind of jumping into it is telling me that basically there's a big future. Now, the part where Netflix has a huge disadvantage is the fact that they have this internet neutrality going on, right, which could change. So people are consuming so much bandwidth using Netflix that, hey, they're basically almost a hostage to Comcast and Infinity and those kind of Time Warner guys, because they can pretty much put a stranglehold on the internet connection, and I think that cost is going to go higher for Netflix, right? So it's just beginning. All the deals that they did, I think that's their biggest, probably, if anything, Achilles heel. But I don't think that's going to change like tomorrow. So in the end, interim for today's earnings, I think the 1x2 is a good trade, because I think the downside is more limited and the upside is more likely, which is why the predicting only a 10% down move, because people don't think it's really going to go down that much, but it's not. It's capped at the upside for 10%, right? 10% is $35. It's a pretty decent move up. So they think it's capped on the upside, and nobody really thinks it's going to go down $35. So that's my 2 cents. Oh yeah, I got filled on MO, right? Let's see, what did I do? Yeah, so May 09, what the hell? Right, so I bought these puts for 33 cents 5 times, and then now I can do, what can I sell? Yeah, there isn't too much to sell here, right? Maybe I'll sell these, right? 37 puts. So you see how I bought 5 of these, 7.5 for 33. So what I'm going to do is I'm going to say this thing is not going to fall below 37 bucks in the next day. But the trick is, oh yeah, sometimes, you know, I have amnesia. The reason I couldn't sell them because I told you guys this is like an earnings event. So I bought 1.5. I'll see how it goes. It might actually be a naked play, so I might have to sell something else here. But I'll think about something. But now I own them for very low volatility, so we'll see what happens. So even after earnings, it shouldn't go down too much. But that's it for now. This is the earnings report that I get and I go through every day. This is pretty spectacular. It's like the same thing. You not only do you get ideas, but then you can kind of get some rough stats on what the options are valuing the stock and then how much it's moved. A lot of the professionals actually look at this to kind of give advice to their clients. But anyway, in the end, you can subscribe to that. I also I want to thank the San Francisco Bay Area Options Group. Here it is. They meet at Fort Mason each after expiration Saturday. This is monthly, and you guys can kind of go and talk about options for all of you guys who are interested in option. They're a great bunch of guys, and if you are serious about trading option and you're in San Francisco, there's no reason why you should not be part of the group. I think the yearly is pretty low. It's like $30 or something. It totally is worth going there and paying for it and being part of a group. And you can get ideas. You get people talking about new products and services. And then they have actually members who actually present their trading ideas. So I think it's a really good way to trade and get ideas and be part of. So I want to thank all the members there for having me and basically having me present. So other than that, I want to thank you guys. If you guys want to try on Livevol X, go to www.livevol.com, click on Livevol X, and then basically get a free trial. As you can see, we were actually featured in Barron's. It's the first time a major publication like that actually went and wrote a whole article on our software. It was pretty exciting. Go ahead and read it, and I think you can get some good ideas. But other than that, take care. I'll talk to you guys tomorrow at 10 o'clock. Hope your trading goes well. Bye.